Now, I'd like to spend the next 20 or 25 minutes, conveying some of the lessons that we've learned along that journey. All right, so let me now start on the next slide, not by talking about lending technology, but by talking about expectations of consumers in this increasingly digital area. The consumer behaviors that we saw before the pandemic, i.e., an increasing trend towards being more digital, has only accelerated in the past 18 months during the pandemic. I don't think that would surprise anybody. Now, in short, consumers are more digital, and their expectations around digital experiences have only increased. And I don't believe it's ever going back. All right, so on this slide are the names of 5 iconic technology companies. I easily could have put up others, and certainly another 5 or 10. Now, technologies and consumer experiences built by the companies on this slide have altered the expectations of consumers forever. These companies, which were dominating the categories that they exist in before the pandemic, have now seen even more exponential acceleration and much greater consumer adoption. Let's review a few statistics just to relive how important this transformation is. Let's start with Amazon. We all know this company. Amazon Prime now delivers everything in 2 days, many things in 1 day, and an increasing number of goods on the same day. And now Amazon has more than 200 million Prime loyalty subscribers. Wow. Next up, Zoom. Zoom was winning the video conferencing space before the pandemic began, but during the pandemic, they reached a pinnacle only a few companies have ever reached before. That is, they became a verb. Think about that. Now, while they have competitors that are heavyweight titans like Microsoft and Google, Zoom emerged as the heavyweight champion of video conferencing because of the consumer experiences that they delivered. Now, Zoom now has more than 350 million daily participants. 90,000 schools use Zoom in the classroom, 90,000. 45 billion, yes, 45 billion minutes of webinars occur on the platform every quarter. And get this, 3.3 trillion, that's trillion with a T, minutes of Zoom meetings take place every single quarter. Wow. I guess we can believe that given all the Zoom meetings we've been on the last little while. Let's talk about DoorDash. This company delivers meals to our homes. Now, during the pandemic, subscriber grew from 1 million to 5 million. Wow, 5-fold. Revenue was up 3-fold. And they became a public company, and they soon will deliver their 1 billionth meal. Now, another interesting stat from DoorDash is the average delivery time is 37 minutes, and they execute that in over 4,000 North American cities. It's really quite an achievement. Let's talk about Netflix. Netflix, a company that's been around a little bit longer than the ones I've already talked about. Netflix now boasts 200 million subscribers. 23% of Americans stream Netflix on a daily basis. During the pandemic, Netflix usage jumped 61%. And here's a mind-blowing stat. 204 million Netflix content hours are streamed every day. Every day. All right, and then lastly, let's talk about Peloton. Peloton's one of my favorite companies. And it's a different type of company than the ones I've talked about because it's not an all-digital product. It's a physical product, right? But it's a connected physical product. And that connection has made Peloton the overwhelming leader in home exercise equipment, right? Peloton now has more than 4.4 million subscribers and members, and that's tripled during the pandemic. And there are 98 million workouts per quarter that take place on the Peloton platform. And that's up 5-fold since the start of the pandemic. I did a few of those, but probably not enough of those 98 million workouts. Now, I tell you the story of these 5 companies, not only because it stresses the incredible transformation to the digital world, but because companies like this and their counterparts at Google and Apple and Facebook and Uber and others have fundamentally changed the expectations of American consumers, right? We shop online. We've talked about that. We meet online. We get entertained online. We get fed online. And occasionally we exercise online. I think we get fed online more than we exercise online. Now we go to school online. And I forgot we date online. There are 25 million users of dating apps in the United States of America. And of course we bank online. 76% of Americans access their financial institutions' banking applications online. And those numbers were as high as 91% during the pandemic. But do we lend online? We lend a little online. But as a whole, as an industry, we're probably not that far along yet. And I'm going to talk about that in a minute. More on lending in a minute. But before we do that, Before we talk about lending, let's stay with the consumer. All right, let me bring up the next slide here. I believe that due to these application companies and this incredible transformation in this Amazon world, that there are four major changes that are on this slide and how consumer behavior has changed, and it's been largely driven by the fact that the American consumer now lives in this online Amazon Google world. Okay, number one, first bullet on this, or first icon on the slide. Consumers expect the immediacy of delivery. They expect it now. I've just told you, any local restaurant food can be delivered to your house in 37 minutes. Press a button on the phone in your car, and it'll be fast. A car will be there faster than 37 minutes. Press another button to get anything delivered to your house in 2 days or less from the world's largest everything store. Consumers have been trained to expect things now. Click a button on your remote and pick from a huge array of TV or movie options, right? Talk to your smart speaker. Don't even have to click a button and play a song off Spotify. And Spotify contains just about every song ever recorded in the history of music. Well, that's a bit of an overstatement, but there are 70 million songs on Spotify, and it plays instantaneously simply by saying, Alexa, play me the name of the song. It's really an incredible world. So how are we doing on the lending front, on this front? Can we instantaneously get loans? Same-day loans, next-day loans? We're starting to, but we're not there. It's still very early for us. All right. Trend number 2 in consumer expectations is consumers expect to be able to shop anywhere at any time. Now, let me focus on the word shop here first. Whether we like it or not, American consumers have been trained to shop for all products now. With so many products and services available online, it's easy for consumers to look at multiple options and compare and contrast them on their computer or more likely on their phone. Think about how easy it is to compare your cars online. In the past, you used to visit multiple dealerships. Now, there are multiple services which stack the cars feature by feature. They include multiple reports from expert rating agencies. And this industry that was fraught with price opaqueness now lists the manufacturer to dealer price online. It's pretty incredible. Another key component of the customer's expectations in the shopping area is they want to see reviews. Reviews not from professional experts, but actual buyers. Actual buyers add a more trusted element than professional reviewers. Think about how many reviews are online on a typical Amazon product and how often you check them when you're looking at a product. Think about how many reviews there are on OpenTable or Yelp for restaurants. And while the review industry is far from perfect, it's an important element of the consumer shopping experience now. Now, consumers also want to be able to shop at any time of the day and night. Gone are the days of limited hours and physical-only presence. Consumers today shop 24/7 on their phone from the comfort of their couch. And we're going to need to be able to do that in lending. Almost every American consumer is walking around with a supercomputer in their pocket with a high-speed internet connection that is only getting faster. And the smartphone has become the new store shelf. How good are we at lending on mobile, at lending 24/7, at price transparency? Are reviews from our customers online? Are we providing testimony and advocacy for our lending products? Well, probably not as much as they are on Amazon. All right, so that's the first two. Expectation change number 3 has to do with quality. Quality expectations in an increasingly digital world are on the rise. Not only have companies like Amazon mastered immediate delivery, but they have done so with high quality customer service that leads to very high NPS scores. And let's face it, most digital experiences are pretty good. Uber is not only more immediate and more convenient than a taxi, but the entire experience is hugely more positive than the world of dirty cabs who often didn't arrive and refused to take your credit card when they did arrive. Remember those days? I do. Now, when I ordered my Peloton, they delivered to my house. They delivered it within the 1-hour delivery window that they promised me. They brought it in, they set it up, and they gave me a lesson. That's a different experience than what physical products I've had in the past. When I ordered glasses from Warby Parker, they ship me 5 sets at a time. They allow me to pick the frames I like, and they provide me a box and a return postage to return the ones I don't want. The winners of the digital space don't just compete on price, immediacy, and availability. They compete on the quality of the entire experience, the end-to-end experience. And if they're doing business with Amazon and Zappos and Warby Parkers and Peloton, you can be sure that they're going to hold credit unions and financial institutions to those same expectations. All right, the fourth shift in consumer expectation is only partially driven by digital. In fact, it may not be driven by digital at all. But coinciding with the shift to digital is a shift in consumers' expectation that the corporations and the products that they buy are good for society in general. Consumers want to know that you treat all stakeholders in the equation fairly. That doesn't mean just shareholders. It means customers. It means employees. It means suppliers. It means the whole ecosystem. Consumers also expect you to deliver your products sustainably in this environment. And this is important in financial institutions. Consumers expect you to deliver your product fairly and equally to all members of society, including access to low and moderate income individuals and to minority individuals. Now, these are four big shifts in consumer expectations. They're long-term, they're large, and they're transformational. And by transformational, I mean transformation means you can't go back. These are four big shifts that aren't going to change. Now, we in financial institutions, the financial institution business, in the consumer lending business, must provide products and services to meet these expectations or face a decrease in customer satisfaction and eventually lower demand for our products. I think that's the only obvious conclusion about what's happening in the marketplace. All right, next slide. Now, given these big consumer trends, let's see how consumer lending is doing at delivering on these trends. And before I do that, I do want to take a look at the segments of consumer lending and what's been happening in each of those areas. So if you look at this slide, in 2020 was a great year for consumer lending in the mortgage and real estate space. Historically low and falling interest rates drove record demand for mortgage refinancing. But as 2021 heads into the second half, actuals or predictions are that the refinance marketplace will be less hot as interest rates plateau and indeed potentially climb. Now, also in real estate, HELOCs have been on a multi-year decline as consumers find a way to access credit without using their house as security. And student loans and lending has always been a challenging space for credit unions. And given the uncertainty in Washington and the scrutiny in general in this area, student loans are not likely a high area of growth for financial institutions. But there are two areas that we are very bullish about at Upstart. Personal unsecured loans were the fastest growing segment of consumer lending pre-pandemic. And while 2020 was a difficult year for personal unsecured lending, it was largely because traditional banks tightened their credit policies and supply was at historically low levels. Online lenders like Upstart were impacted by the pandemic crunch, but our business bounced back very quickly after that initial shock. And indeed, our company grew loan originations by 40% last year when the market was down 20%. I think that's a testimony to how online people are. And our business is growing even faster in 2021. We are of the opinion that personal loans provide a great opportunity for growth as the economy recovers for credit unions. Now, the other area of lending I want to talk about is auto loans. It's another potential area for growth in 2021 and beyond. Now, there's a current chip shortage that's affecting the automobile industry, but it's driving up the price of both new and used cars just as the pandemic is ending, and predictions for auto sales were more robust. Now, Upstart believes auto loans represent a great opportunity in the coming years for credit unions. We're also extremely bullish about growing the auto refinance marketplace. The auto refinance market today is a very small part of the market. Only 4.5% of $1.3 trillion of auto debt is refinanced. Very small amount. That despite the fact that many loans obtained at a dealership are done so at a range of 200 or 300 basis points above market. We believe that newer technologies could open up the auto refi market, and that is a substantial opportunity for credit unions. Our studies show that properly underwritten auto refinancing can save consumers 15% on their auto payment. Now, auto payments on average in this country are about $480. So the opportunity to save your members money is considerable. Think about the auto insurance industry. It spends more than $5 billion on advertising every year to convince consumers to spend 15 minutes with them to save 15% of their car insurance, right? But the average car insurance bill is only $135 a month. So the opportunity for us to help in auto refinance is even larger than it is for companies like Geico and Progressive. We believe that advanced technology can do the same for auto loans and save American consumers even more money than they are saving with auto insurance. It's a pretty exciting space. All right, so next slide. And I'll be shift and talk about what we know that lending needs to become more digital. And let's review exactly what needs to be done. Exactly. Number one, we're going to have to provide immediacy in an Amazon-like world. We're going to have to provide fast funding. We're talking about same-day funding or next-day funding. Secondly, we're going to have to provide digital experiences so that customers can access lending applications 24/7 on their mobile phone from the convenience of their couch. Third, we're going to have to provide a shopping experience. We need to understand that consumers will have options and they're going to look at alternatives. And we need to provide transparent pricing that can be quickly accessed. And we should have reviews online from satisfied customers who can advocate on our behalf, much the same way that an Amazon reviewer would advocate on behalf of the products that they've purchased. All right, number four, we will have to provide consumer lending experiences that are best of breed in each category. Each type of consumer loan is different: mortgage, student, personal, auto. Having one generic application or process is not likely to cut it. Not in this world of very high consumer digital expectations. Consumers will expect that each loan category is optimized for each particular type of loan. And lastly, consumers are going to expect that our lending programs are broader and more inclusive than they are today. That's going to be a big one. Now, consumers expect us to provide capital and access and credit access not only to them, but to members of society, which have been traditionally shut out of the lending ecosystem. That's going to be a much different expectation than we've had before. All right, so now let's move to the next slide. So for those of us in consumer lending business, what are the hurdles that are stopping us to achieving these Amazon, Google, DoorDash-like experience? There are 5 hurdles in my mind that come to mind. Number one, since consumers expect a fully digital process from rate check to application, through underwriting, verification, digital closing, and funds delivery, it means much more than taking your paper application and putting it online. We've done a pretty good job of doing that, but it's not enough. The entire process must become digital. And that's a lot harder than just slapping that application online. So creating that all digital experience is a much bigger job than what we've done so far. Secondly, we're going to have to provide fast and efficient underwriting. If consumers are expecting delivery of funds on the same or next day, underwriting must occur in real time. Let me say that again. Underwriting must occur in real time. That's a big hurdle. All right. Number 3, once we've provided the rate and made a loan offer, the verification process must be much simpler than it is than today in traditional environments. We at Upstart spent a lot of time on automating the verification process. Now, 70% of our personal loans are verified without human intervention whatsoever. And we believe that this must be the standard going forward. Cumbersome document-based physical verification will not lead to DoorDash-like experiences. It just won't. Okay? But while we're doing this, there's another thing we're going to need to do, and that's we're going to have to be great at preventing fraud. First-generation online lending experiences had inadequate fraud prevention. Increasingly sophisticated fraudsters took advantage of that. Online high-quality fraud prevention are table stakes to create a fully digitized consumer lending experience. And then lastly, we're going to have to be very efficient at marketing and have very good tools. Some of the beauty of Amazon, Netflix, and Google is that they have the ability to anticipate which product you will need and when. This reduces their customer acquisition cost and enables them to lower prices while keeping profits steady or even increasing their profit. Financial institutions will need to use modern big data marketing techniques in order to be more competitive in a modern all-digital world. Okay, that's a lot of hurdles. They're pretty significant. They're large. There's 5 of them here. There might be a few more. But fortunately, I'm here to tell you that technology is around to help us with these challenges. And there's one particular technology that we use on the next slide: artificial intelligence. Artificial intelligence is the key to creating great digital experiences. If you think about it, artificial intelligence is baked into all the modern digital experiences that I've talked about. Amazon and Netflix use it to predict what consumers need, price it appropriately, deliver it effectively and efficiently. Companies like Uber use artificial intelligence to match supply and demand and to ensure quality experiences in each of its submarkets. Spotify uses artificial intelligence to help select the next song to play so that you keep listening. YouTube and TikTok and Facebook use artificial intelligence to feed you unique content streams, information or entertainment that's selected just for you. And artificial intelligence is the secret weapon of all large-scale digital applications, and it will be the key for consumer lenders to deliver modern all-digital experience. It's our superpower. Now, my company, Upstart, uses artificial intelligence extensively to power our consumer lending platform. And I'm going to move to this next slide to talk about how some of the areas that we do that. Now we use that artificial intelligence to not only drive originations to our banking and credit union partners. We use the AI models on the left-hand side of the chart I'm showing you here to automate underwriting. We deliver instant rate quotes the moment an application is finished. Further, our underwriting is proven to be more effective than traditional models because we use more than 1,000 variables in our risk model. Faster and better underwriting will be the key to consumer lending. Now, number two area in the center of this chart is using artificial intelligence for verification and fraud detection. And artificial intelligence is key to doing this at scale. Most Upstart Power loans are automatically verified without a human being touching the paperwork. I mentioned that. This enables us to speed the verification process and deliver same-day or next-day funding. The verification process uses AI. It is also more effective than traditional verification, and it can be done and keep fraud rates that are near zero. Now, only big data and artificial intelligence can solve this unique problem in the lending industry. Now, lastly, Upstart uses artificial intelligence to deliver the right offer at the right time to the consumers that are in the marketplace for lending products. Upstart uses a wide variety of data sources, including an increasingly large internal consumer database and modern AI-based models to market both offline and online to consumers. Now, further, in the credit union space, once this experience has been completed, we can help credit unions qualify a loan applicant as a potential new member and drive new members to your credit union. All that is possible with the use of artificial intelligence technology. So let me wrap up by telling you a bit about Upstart as I move to the next slide, and how we help credit unions, or at least summarize how we help credit unions. Let me start by reiterating that we are one of the good fintechs, I like to say. Many fintechs desire to be the bank or financial institution or the credit union of the future. We are not one of those. Upstart is a partner to lenders. 99% of all Upstart loans are originated by our lending partners. Here are just a few of the logos of our lending partners that are in our network, and we're actively seeking new partners as the Upstart business rapidly expands. We have significant loan volume, and we're looking for origination partners both in 2021 and beyond. All right, we move to this next slide. The two areas of loans we specialize in at Upstart are personal unsecured lending and auto lending, and particularly in auto refinance loans. Now, in the personal loan unsecured space, I want to just show this statistic on this slide. And I mentioned that our technology powers more than 1 in 10 personal loans in the United States. And our AI algorithm allows us to tap into this opportunity. Now, our research shows that 80% of American consumers have never defaulted on a debt. Yet only 48% of them have access to personal unsecured credit. Think about those numbers. 80% have never defaulted. Only 40% have access to personal unsecured credit. Our technology enables credit unions to find those borrowers and price the loan to make the returns that credit unions expect. Right? All right, next slide. Secondly, we're specialists in the auto refinance industry. I'm going to show a slide. I think I've talked about a number of these stats. This slide shows that the auto refinance market today is pretty tiny. There's only 4.5% of the $1.3 trillion of auto loans is refinanced annually. That's small. That despite the fact that I mentioned that consumers have exited a dealership with a loan that's often 200 or 300 basis points above market. We believe that this market can be accessed by credit unions by providing a modern, all-digital way to refinance these loans. And we can help you approve more borrowers at lower rates with modern technology and reduce the hassle for consumers involved in the refinance process. We've integrated our applications with DMVs, with insurance databases, and have automated the lien perfection process, which is often so troublesome in the refinancing origination space. So in summary, let me tell you that we help credit unions in 3 ways. First, we help you grow your consumer loan portfolio in both the personal and auto loan space. And we do this by helping you deepen relationships with your existing clients You can use our product to power the Apply Now button on your personal and auto lending sites. More importantly, we can help you acquire new members through our Upstart referral network, where we drive fully originated loans to your credit union. All right, that's area number one. Secondly, Upstart's technology, and particularly our AI underwriting, allows you to lend to more creditworthy borrowers safely. We typically increase approval rates by a factor of 100 or 200% while keeping loss rates within your expected tolerances. That's a big, bold statement. We increase approval rates by 100 or 200% while keeping loss rates within your expected tolerances. And lastly, Upstart's technology, either on your website or powered by the Upstart Referral Network, will deliver a modern, all-digital experience. An experience that consumers are expecting because they do so much business in the rest of the digital world. The type of experience that we're talking about today, from Amazon, from Google, from Uber, from DoorDash. We help originate loans in minutes, not days. We automate the approvals with minimal fraud rates. So if you want to learn more about how Upstart helps credit unions, please reach out to me. I think the information is on the slide contained here. So in summary, let me recap. I talked about a bunch of things today, but consumer expectations have changed radically in the past few years, and the pandemic has only accelerated that. Consumers' expectations are higher than they've ever been, and they are much different than they have ever been. Consumer lending, if it's going to compete, has to adapt to the modern American consumer. We must provide experiences equivalent to the digital leaders in the other areas. Delivering those consumer lending experiences online have several major hurdles. Chief amongst those, online underwriting, online verification, and a fully digital process. But those can be overcome through the adoption of artificial intelligence technology. So we have a long way to go in consumer lending, but the path is clear and the technology and partnerships are available to take us to the next level. Thank you and have a good day.